Good afternoon, everybody. This is Dan Hussey with AlgoDayTrader.com and ElliotWaveForecast.com, bringing you our European session recap. Let's begin with the S&P 500. We have an unfilled open gap for today, down at a 1757.5. Stepping out to a larger time frame, however. Important to note that our big daily full pullback has yet to be hit up at the 1770s. We have, however, hit upside targets from our extension longs. And we need to go same anchor, new high. Which brings these big daily extensions if we end up going, getting a pullback, means our big daily extension is all the way down at a 1592. So 1592 would be our big daily support level. And this is simply same anchor, new high. There is a weekly support level that basically aligns with that. I mean, it's a 20-point difference, but when you get down to it, it's really not huge compared when you consider the amount it has to fall. But a 1570 support for the weekly extension. And then our 4-hour, next in the series 4-hour would be support level would be down at a 1693. So before we even get to any, either one of these levels, we have to take a look at our hourly trend and see what's here. We know that there's an extension long that has now hit upside targets, drawn from a 1775 or 1717 anchor to highs here. This extension has hit its 1764 upside targets. The same anchor, new high, means we have a 1740 hourly support level now on the S&P 500, going down to a 15-minute chart. Inside this level, there was a full halfway back, traded to targets. Next in the series, traded. And then inside this level, you can see pull a Globex long from the 1751 halves to highs here that aligns with a gap fill at the 1757s. But really, ideally, the big levels to watch are the 1740s. It's our hourly extension drawn from the 1717 highs back on 1016, and then going further out, all the way down to 1592 and 1570 are our big daily and weekly levels. Those are so far off that they're not even worth talking about. But if there is that bigger substantial pullback, but this market could just kind of rip and keep rallying. And we have marked the 1685 highs because these 1685 highs could potentially become an extension if we really start to continue higher without any substantial pullback. So we could get a runaway market. That's a reality we need to consider. All right, I actually want to talk about the dollar yen next, and then we'll move on to the euro. Which is great to see the euro just actually is breaking some 61.8 lines here of a long. I want to see this long break because a move down to 136.40s is definitely in order, and we still have orders to buy and get long down there, but we'll come back to that in just a moment. Let's look at the dollar yen in its rally here. And there it goes. Alright, so we haven't had any reaction from this swing short. Take that completely off the chart. Was not anticipating any reaction off that swing short, to be perfectly honest. But you had to kind of respect it. And the reason being is, you know, when we go back out to this 4-hour chart, alright, we are really still inside of this wedge and inside of this much larger extension, the 94s being the entry point with an upside target for this extension all the way up to 108.30. Inside of this, no long or short has held. You know, nothing inside of any of these poles has a 50% long or short held. The only thing we do have holding right now is a swing short off of this high, but looks like we're going to be coming back up for another test of that level now. And if this is a triangle, we'd be looking for this to break, and we'd be looking for a move back up and into at least, at the very minimum, somewhere in this 99 to 102 range, anywhere in here, at the very minimum from here. Okay, we're not trading it like that. We were able to, we were able to get long for D trade. We got long 97.25s, but we are also we're able to get free in that trade as well. This short squeeze is kind of exactly what we would expect for the completion of this triangle. You know, we're now looking for what is, I mean, which way we need this range. This range has to break one way or the other. Like it or not, this range has to go, and it's going to be interesting to see what happens with it over the next few weeks. Really, probably less time than that. Probably over the next few days, because this thing could just go. If we get a solid break of any levels, we'll be buying the pullback and adding. But in the meantime, we do have a little series of micros here, and we'll go over the micro trend because that's what, in my opinion, has mattered in this market. So we had extension shorts that held, traded to target. Same anchor new lows broke, but upon breaking, it was in extensions and just stayed in extensions off of lows. It traded once, twice. Same anchor new high actually traded here, has now blown out of targets. Upon breaking out of targets, they started a new extension from the 97.70s to highs that traded once, and then now has blown out again. So we'd be looking for probably new extensions here, new micros. At the very least, 97.70 anchor to highs. And then, of course, now that that long has broken, or short has broken, the prior swing short, we could be looking for a full pullback. So support now at the 98.12s, 98 and 97.60s for the dollar yen. That I definitely, I'm anticipating this thing continuing its rally up and out of these levels, and I mean eventually continuing on to at least, you know, the 100 figure above us. Euro yen, we've only been talking about this on the 4-hour time frame, but we still have upside targets at the 136.60s and the 137.40s. These have been valid upside targets for months now, and we're just slowly kind of making our way to them. It hasn't been a very quick trend. It hasn't been an aggressive trend, but it has been a trend. And right now we are holding and trading to target. It looks like an ambush short or long. So the short broke with our gap up last week, drawing from the long to high here, or from low to high here. We traded into the 134.30s, and we have 135.30 upside targets. It's a very slow trend, but the trend is holding. Aussie yen, a little trickier. It is still in this, you could call it a next in the series long. It's defended a 61.8 line. There has been no full short off of the high that's traded. but it has gotten the long has gotten squeezed a bit here. Drawing a glowback short, we have held an ambush long off the lows, 2 targets, so next to the series now would be valid. But really, we're looking to see if the 93.30, 93.34 area offers resistance here, and if not, we could buy a pullback on a break of the 93.50s, buy that 50% pullback in the Aussie yen, but a little bit riskier. I like being long the dollar yen right now, and we'll talk. And the reason being is we're going to take a look at the euro and the Aussie and the pound, which are all breaking their 61.8 lines. So the Aussie already did, but the pound, the euro, and the Aussie, we'll see why there's a very good case for some dollar strength now, particularly Aussie and euro weakness. But it's going to be more of a dollar strength game, and we're seeing that play out right now with this very very strong rally the dollar yen's getting. Keep in mind, yeah, it may only be up 50 pips on the day, but this is a market that has really been inside of the dollar yen. That has been almost every day has been inside of 50 pips. So it's quite a big day for the dollar yen. Excuse me. All right, we're gonna skip right into the euro dollar. Go out because right now there's a lot of larger time frames that you need to be aware of. All right, stepping all the way out to a daily chart here. Coming up off of our retest of the all the way halfway back long, and this is the all the way halfway back long is simply drawn from Eurodollar's all-time lows to what were what were the all-time highs, and that resulted in about a 50% long level right around here at the 121 level, and that has been what has been support now for since this recession and for quite some time. And it's traded twice. It traded the first time back in 2010, and then traded again here in 2012. But the important thing is that off of these lows, the euro has picked up inside of both daily pullbacks drawn from this 120 low to the 137 high, as well as upon breaking the full short here, the market pulled into a full long and traded it to the tick at the 131 level, 2 targets. And now that targets have been broken through, we're actually considering and looking at this 4-hour chart and drawing from the anchor high, which is a 134.52, to highs here at the 138.30s. And this pullback we're looking for into the 136.40 area. 146.43s. 136.43s. This would be the extension on the euro dollar that we're looking for, that will take us and continue us higher towards the 141 daily euro dollar target. And we're not even talking about the weekly target that is all the way up to 178. I mean, we're just concerned with the 141 target. Is that, that daily target's a reality now. Now there is always the possibility that if that extension fails, that the euro could pull back into a full halfway back long. It would be both a full halfway back long for the year for 2013, as well as a full halfway back long for our 4-hour trend at the 133 figure. It would be a 132.89. So, but we'll worry about that when it happens. Most important here is going down to now our 15-minute time frame. Taking a look at the 15-minute trend, is that we've had a break now in the euro. The euro had extensions here that were holding once, twice, blew out of targets, and then traded brand new extensions drawn from the 137.05's anchor to highs. Traded once, twice. Those have just broken today. You can now safely sell the euro in a pullback, if there is one, in a 50% pullback. That is now a viable thing you can do, but down into the 136.40s. I personally won't be a seller of the euro. I'd rather be long the dollar yen to capture this dollar strength. But selling the 137.87s here is technically a valid option. I'm more inclined to wait for the 36.40s for that buy. Anyway. That's what we're looking at now in the euro. A break of the 15-minute trend, and now a pullback into the 136.40. And that level's going to be a great long, an area to get long. The Aussie US dollar, very similar situation to the euro, with the exception of now we're looking for it to pull back into its 93 full halfway back long, where it should be a great long for a move at least into parity to retest the 1.0 level. Which would be a major, which is actually where the full short off of our 110 high to this 88 low resides. So with the euro pulling back into its 136.40s, the Aussie pulling back into its 93s. And from an hourly perspective, the Aussie actually did give us a short off the high, and then actually has been trading a series, which is now that series next to the series broke, went to and through targets. Now we're looking at extension shorts on the Aussie from a 95.73 anchor to lows, traded once to target, same anchor, new low here. Resistance on the Aussie in the near term at a 95.30. Could also pull the full short, comes in at about a 96.20, but anyway, looking for a move or the pullback into 93 figure, which is a really major support level there. The Euro Aussie, also looking for a full pullback in the Euro Aussie. We finally have traded the big daily support. This big daily extension long at the 131.94. It finally traded down here at the 141 figure. It was really a 141.14. And the lows were actually a 141.20, like 4. So it was about a 10 pip front run, but of a big daily level like this, that's totally acceptable. Anyway, we got the reaction we needed, and we're looking for now a pullback into the 143.29s. There is certainly, going back down to an hourly chart, there's certainly other support levels here. There's extensions that began. And potentially new extensions here with support at the 144.80 area, which we're actually trading right now. But with the this is a game of the euro and the Aussie, which is falling faster right now for the euro Aussie. So I'm more inclined to get into the 143 and wait for this bigger level, as both the euro and the Aussie have further to pull back. And if you notice, the Euro Aussie, or the Aussie, only has 190 pips to pull back, versus the Euro US dollar has about 140. So it'll be it's kind of unknown which one's going to get there first and get a bounce first. But like if the if the Aussie gets to its target first and gets a bounce, the euro is going to the euro Aussie is going to skyrocket. So anyway, support right here. See if it holds below a 144.60. We're looking for that. We are looking for the move down to the 143.40s or 43.30s, excuse me, on the euro Aussie to be a better buyer. Gold is probably the one of our more technical assets right now. Upon breaking the Globex, or this long, gold has traded up into a full short off of its 143.34 anchor to low high short here. Now this is important. It's important to actually go down to an hourly and take a look at the series of longs gold traded off these lows. Traded a long to and through targets. It then traded extensions once to target. Same anchor, new high. Traded twice to target. Then blew through targets, and we began new extensions in gold. The new extension failed just today. See it failing the 6-2-8 lines, and upon failing, pulled into an ambush short inside of the larger ambush short. So gold now need to be aware that it actually has technical downside targets of a 1207, and even further down, a 1058. And this is of course all in the direction of what would be there we go, what would be for gold the all-time full pullback for gold, drawn basically, we draw it from 0 all the way up to the 1920 highs, and it comes in at 960. So you can clearly see how gold has two setups that could continue this trend lower and down into that level. 1000 is going to be major psychological support, but more importantly, the 960 level is where the full halfway back long actually is. Okay, and that's important to note that it's down there. All right. All right. Well, that concludes our European session recap. Be here all the remainder of the day. As a reminder, on November 1st, we start this Friday. We officially start with Elliott Wave forecast. So the room will be taking a slightly, just a minor. Have a couple minor changes to it. We'll be taking live trades in the room, in addition, to offering trade alerts and everything still to current subscribers. Products really won't change much from your end. But you will, anyone who is subscribed by then to Algo Day Trader will also receive you'll receive some goodies from Elliott Wave Forecast. You'll receive the comparable plan there as well. So your I believe it's trade alerts and Algo Insider subscribers will receive their standard plan over there, and then anyone who subscribes to DTrader or the trading room at Algo Day Trader, you'll be receiving their premium or premium plus plans. You'll be receiving an email from them within the next 24 to 48 hours explaining the shift and receiving your login credentials as well. So I want to just want everyone to be aware of that, to look out for that email, and so that you can start using their services in conjunction with the Algo Day Trader services as well. They definitely have a lot to offer, and there's a lot to learn from them for many of you, I'm sure. But yeah, so all right, have a great day, everybody, and we'll be back with you as price action develops.